Hey guys, this is Jeff from ZenTrader.ca with a market update. I want to talk about my timing signal. It issued a sell signal on Friday around 1 p.m. Eastern Standard Time. I sent an alert out to those of you who are on my free newsletter, and you can sign up for that either on the main page of the website, or you can go to zentrader.net, and that will just take you right to the newsletter sign up. And why you want to be on that is I send out an alert the moment that my signal changes, which it did at 1 p.m. Eastern, as I said, which is actually right about here. And so far, we netted about 15 points off of that. Now, we may get a little bit of a bump up early this week. I'm not sure, or we just may start to sell off quickly. We've been on the sidelines on the U.S. markets here, and I really wanted to make sure that this sell-off was for real, and it has. So we missed some of this move, but I think that we have a good reward to risk trade here. We've got really oversold readings on the RSI, which is what you want to see. You want to see a little bit of a rebound, which we have. I think the 60 level will be the resistance on the Nasdaq for the 60-minute chart here. As I said, this may have been all we've got. The rally that the markets attempted this week was very weak. So with that being said, the Dow is in a bearish wedge consolidating pattern here. I expect it to break to the downside. Whether it does that or not, I'm not sure. All I know is that going forward for the next couple of weeks here, as long as my signal remains negative, I do believe, and I position myself short on the diamonds and Qs. But I think going forward, the momentum trade should be shelved. I wouldn't be buying new highs at this point in time. I think those are the kinds of trades that are susceptible to significant moves to the downside as the market breaks down. The financials are really broken, especially with that JP Morgan news. I remember earlier last week I thought the markets were going to bounce, and I actually was playing a few specific long plays. I have since exited all of those. For actually a slight gain, really. Harley Davidson was the only one that kind of hurt me. I really kind of lucked out on some of the other trades. They made up for the losses that stock had, but I feel lucky that I got out when I did. I was looking at the put-call ratio, and you can see that it really has spiked up. But I'm leery at using this chart for any kind of timing, because when you look at the VIX and you take away the noise, you actually take away the VIX indicator, and you look at the 10-day moving average, you can see that we're really stuck in normal volatility right now. Actually, I don't know how reliable this, but there is a little mini reverse head and shoulders here, but I never really paid attention. I just, as a chartist, you kind of notice these things. But the point is that we're not in like high or extreme areas of volatility, so there's a lot of room for this market to go down. I know when you look at the Dow and you look at the Nasdaq, you think, okay, we're off 500 points on the Dow. Now we're ready to rally. Even if we break out of this wedge, I think that this 1300, 1350 is going to pose significant resistance. So I would just be very careful getting long anything right now. The other market I just wanted to touch upon quickly to kind of what's the word I'm looking for? Give some closure on this trade. I actually covered, or actually not covered, this is wrong. I sold my longs. I had to change that. I sold the long that I entered here around 12,180. This was just a miserable trade. My timing signal was way off on this Toronto Stock Exchange, and I may have to rethink this. This is still in the experimental phase, but like I said, I closed out a long, so I'm very bearish.